Hey friends, how you doing? Ernie here with the 0 days to expiration final hour trade. A lot of videos today. First had a video on the overall sort of a primer to joining our service and what it's like. Then I did a video a little after that on volume profile. And now we have our daily final hour trade. So what we're here to do is look at the final hour and try to figure out if we can put on a trade that will take advantage of the unique characteristics of trading the very final hour of expiration of an options contract in the S&P or the SPX index. And that's what we're going to do. Now, the trade has, over the past few weeks, has been a little weak. Now, I want to make it very clear that this trade that we're doing here is not really part of our service as much as it is an experiment. And it is an experiment that we are actually conducting in front of the public by doing it every single day. And we're going to do 50 instances of it. Now we're putting real money to it, but what we're trying to do is make these positions very small so that they're not very impactful. Because it is an experiment, it's something that we don't have, how should I say, a mastery of this situation. As a matter of fact, we're learning from it. And that's the whole idea. So when you're in the life cycle of a strategy development, you want to curate that strategy. And the only real way to do it, it's not going to happen from backtesting. Backtesting will not tell you what's going to happen in the future. If, however, you have at least a general premise in mind and you know where your edges are, and now you're just looking for, how am I going to tune this, or is there a special situation that it works best in, or whatever, that I can go with. And really the only way to tell whether you're going down the right path is to actually commit some money to it. You can't even do it in simulation because simulation isn't going to give you the kind of results that you want because, quite frankly, you're not competing with anybody when you're trying to get into a trade. You're competing with nobody. You're competing with the simulation, which is going to be extra friendly to you. So that's the reason why we're doing this. And that is, I've committed to do about 100 trades or 100 instances of that trade. Whether or not we take a trade or not, and then try to look at that and develop a strategy from that. Now, we talk about this in the service quite a bit, different ideas that we can employ. And I think that after the 50th attempt, and we're getting up there, we're at 44 attempts right now, we're going to probably try some slightly different things, shake it up a little bit, and see if that produces a positive result. The real purpose of this is to go through a wide variety of market conditions. And there's no doubt that we've had a wide variety of market conditions in the past 44 trades. Right now, we're in this sort of bear market, and we're going to continue with that and see how it works. The performance has been very good, even though in the past few weeks it hasn't been stellar. Overall, the performance is still in the 65, 66% win rate with a very high return on capital. So it so far has still been a very high positive expectancy. And if you were to take the results that we have so far and extend that out to a long term, this would be a very successful strategy. But we'll see. We'll see exactly. There was a comment here. I thought it was 100 instances. Yeah, that's what I said, 100 instances. That doesn't mean 100 trades. It means 100 attempts at the trade. We've had 8 so far that have been no trades. I may have said in the past that, we'll do absolutely 100 trades. But I'm not so sure about that. I think 100 instances is good because I think the value of having a number of non-trades is also something that we want to put into our data set and take that into consideration. Okay. So why don't we start by taking a look at the market and where we're at. Now, I should tell you that today, for me personally, is a non-trading day. Even though the SPX options on the SPX and the 0 DTE happens 5 days a week, The Tuesday and Thursday trade is relatively new. It started up in May, late May, and I don't believe that it has fully been accepted by the market, and that's kind of evident by the volume that you see in the options chain. And so for me, Tuesdays and Thursdays are days that I choose not to trade personally. Now, other people within our strategy, they may choose to trade those. That's completely up to them. I particularly like the cadence of trading Monday, Wednesday, and Friday, and then having Tuesday and Thursday to do other things. And some of those things that are quite beneficial to the service, where I can put out videos like I did today, and a lot of times private live streams for the group as well. So those are the reasons why I choose not to trade Tuesdays and Thursdays. Low liquidity, and not pure acceptance by the market just yet. Maybe someday it will be that way, and also the fact that I enjoy or like the cadence that sets up for weekly trades. You can do whatever you want. That's what I do. All right, so we've got Will Do here and Conway Davies. We've got Craig. We've got Shreem. Shreem is all psyched up. Well, I hope something can happen. But this market looks pretty nasty. Now, I had two scenarios that I came up with earlier today. Now, even though I'm not trading it, I still provide an analysis every day for the members. And two of my and both analyses came true. One of them has been extended. So both the S1 version of the analysis and the S2 both came true. The S2 has been extended, and we have kept on going down. I did not anticipate such a large drop, but that's okay. So one thing that we've been discussing in the group is on consolidating days, where will the market likely end up? And some members have been doing a study showing that the POC and the VWAP have really pointed to where the market is likely to end up. But usually the POC and the VWAP end up at roughly the same place. Today, I don't think that that's going to be the case. So that would just leave the POC, the point of control, the developing point of control, of which the VWAP is essentially a smoothed out version of the developing point of control. The point of control being the highest level of volume within that session. So let's take a look at that. What I'm going to do is bring up the VWAP. And you can see the VWAP is just not keeping up with price at all. The point of control is still way up here, the VWAP up here. So if we were to say that, well, it's the VWAP then, or the point of control, then we would have to assume that price is going to move up sharply into the close. And I'm not so sure that that's going to be the case. Maybe if we were to take away some price here and look at this a little bit differently, I really don't think so. Now, what we could do is we could look at other areas of consolidation, like here, back on the 23rd and into the 24th, we had a area of consolidation at about 38.28. We have some long-term LVNs. This one down here at 38.16, and then another node, which is really a local node. It's not really a historical node, but if we brought in some more price, you can see that is relatively significant. So the question is, are we going to make it all the way through this, or are we going to stop in one of these intermediary child nodes, or get all the way down to this node down here at 37.80, which would be a really huge drop? That's another 50 points down there. And will that happen in 26 minutes, or 36 minutes, rather? All right, let's see what other people are saying. How you doing, Mohammed? And let's see, Dane says, today I see more as a down trade day. I do not think that POC will work out today as the end of the day. I agree with you. I agree 100%. That the POC is not going to. It will. I think if we had a consolidating day, I would tend to agree. At least there were about 10 different instances that other people within the group have brought up that showed that it was pretty consistent. That the POC was a good indicator, or at least the VWAP or something in between, as a place that you can pick. So maybe we'll find that out in future trades when we have another consolidating day or the second day of a consolidation. We'll take that into account. Here, this is a little bit more difficult. We're in between this volume well. We have a very large volume well between these nodes. We have this node up here, which is T0, and this one down here, which is T2. And that represents a pretty big volume node. If we were to zoom way out, you can see this in better detail. A little bit more. There we go. A little hard to see here. Let's see if I can get. Yeah, see, this is a complex area here. I mean, here's T2, but we have these intermediary child nodes, which are probably almost as prominent as T2. We're sitting right above this one in the middle. I would say that this is probably a good target right here. Now that I bring in this volume here at 3795. And that looks as good a target as any. And the thing that, we'll take a look at some of these other bear market rallies that we've had. This one up here, the very first one, which happened in January, mid-January, but then it grinded down or ground down. And then this one here in mid-March went up very, very rapidly, and then it was a rapid descent down with a little bit of a break, and then further down, and again, just sort of grinding down. And then this bear market rally here that resulted in about a 9-day consolidation, and then finally just broke down big time, made a new bottom in this bear market, and then we recently had this other bear market rally, and it looks like this is breaking down now. Now, I don't think there's anybody that's going to argue that this is most likely going to continue down here. It's obviously not going to happen today with, another 30 minutes to go. But where will it go? And, a lot of these others have found, intermediary places where they have sort of broke and then, I don't know. This is a tough one. Will it retreat a little bit? Will it retrace a little bit? Will it come up to 38.50, or will it go down to 38.95? Or will it stop right in between on this low value node at 38.21? So I think those are the three choices. Let's call it 38.45, 38.20, and 37.90. Let's zoom in on that and take a look at those. $38.90 is a pretty nasty drop. I would say that more likely we're talking about 38.16, 38.45. So I'm going to just put out the areas that I think that are possible. Let's make those yellow. those are the two places that I think that are possible. I did name one more that is lower, but I don't think that we're going to drop that much. So this one is this value node, or this LVN, which has shown some support back here. All right, now of course we're looking at the E-mini. So if we're talking about trading the SPX, there will be a slight difference in price. Right now that current difference is only 2 points, well 3 points. So we're pretty much right on, you know. So we can probably go with the E-mini and just say that, you know, subtract a couple of points if you want to, but it's essentially the same level. So there's our choice. Do we continue down, or do we have a late market rally to retrace some of this? Or do we hang out right where we are? So I am going to say that those are our three choices. I am perplexed by this, but I'd have to say, based on the movement down here, we've come down, we consolidated on this LVN, we broke through that LVN, came back up and tested it. Now we've come down and we've consolidated again. We didn't come all the way down to this LVN yet. I think that we're still going to test this by the end of the day. That would be my best guess. But oh, let's see. We have a comment here about the SPX. If the gap gets broken, I think we finish around 3,800. Oh, the SPX gap. Let's take a look at the SPX gap. Oh, that's interesting. You know, whether or not the gap has any kind of significance or not, but I see what you're saying. It stopped right at the gap. And then the top of that gap is 3803. And that might be a good point. It could be the source of that support there. Well, if that's the case, then I would say that 3,800 is probably the next leg down. That's what I would choose. Boyd Rome says, Magic 8 ball. I need a Magic 8 ball. 3810. Now, that's somewhere in the middle of the gap. Right? That's directly in the middle. Let's go back to the E-mini. All right, so of course, you know, these LVNs aren't exact. You know, they could be within a few points. I drew them when in a day time frame. So currently, right here where we're at right now is the bottom of the gap. 3803 would be right here. So I think those are our three choices. Really want one of those Magic 8 balls, Void. It would make life so much easier. But I'm going to go for and say it's going to be somewhere between. I'm going to choose 3815 as our target. So that doesn't necessarily mean that we have to center a fly right there, but I'm going to take lesser risk here. And let's say 3815. The options chain. Let's see what we're dealing with in the options chain. $38.15. It's not too many strikes down. And we have some cluster of volume, really the biggest cluster, and really the volume is super low. Oh my God, it's so low. This is why I don't trade these days. Look at that. Only 5,000 contracts here? That is crazy. And on the ES over here, yeah, man. Let's take a look at what the SPX has to say. So even for the SPX, this is very low. 38,000 is the biggie at 3,800. And over here on the call side, much lower. So it looks like, it's definitely favoring. But normally on a down day like this 38,000 contracts would be up around 50 or 60,000. So very light volume comparatively at this time of day. So 38.15 was, or 38.10. Yeah, let's try 38.10. Let's take a look at what that looks like. Five wide, 30 cents. Are you willing to bet $30 on this? I'm really not willing to go much more. I don't really want to waste money. Let's call this 40 bucks. Well, let's see where the natural is. Let's find out where the natural price is. Well, it's somewhere between, 45 and 70. Natural price says it's 65 cents. I don't think I would want to pay much more than 55 cents for this. That'd be crazy. We're moving away from it right now a little bit. Price is starting to go up. Brian says the conference board report earlier today really shook the midday market. I think it's coming up. Yeah, I don't think that it was unexpected though. Consumer confidence has just totally tanked. I think everyone's coming to the realization now that this market is going down, and we're not going to have a soft landing. We're going to have a hard recession that could be prolonged, and it's going to be worse than other recessions because it's going to have high inflation married to it, and that spells stagflation, the worst possible combination that one could expect. Of course, trading in this manner, I think, is probably the safest way to trade in such an environment because we're not really risking a whole lot. We're looking to risk very little. So if we were to think that this is going to go down any further, I really, $45, $50, I don't want to spend more than that. Let's call it $45. All right, and then the trade, I'll put the trade in the chat. So there's my expectation, but you know what? Now it's going even lower. If you can get a better price than $45, do it. And if you can get it down to like 30 bucks, let's see what's happening. Zoom in on this. go to a 1 minute chart. So we have this local volume node right here. The idea is that, here, right here is where the center of that would be. The center of that fly would be right here at 38.15. I think, I think that's okay. So going into the market with just saying that we're going to break down a little bit and then get snagged by this other LVN. This is a tough market to trade. I guess it's tough anytime you're coming into the end of a day after a super down day, a trending day. Does that trending day continue? And if it does, will it close at the low, or will it rebound a little bit with some profit taking? Now, I don't know that I even want to trade this, to tell you the truth. So we have no no confirmation at all from the chat, right? Everyone's like looking at this. Oh, what do I do? You don't have to do anything, really. Again, this is just an experiment. But I think it's worth, throwing 40 or 50 bucks at it. Let's say $35 if I can get away with it. Mohammed says he thinks we should sit out today. I agree. The natural price is 50 bucks. Do I want to? It's $50 to make 450. No. $50 is like half a tick in my account, so I'm going to throw it at it. May have missed it just as I put it on.
New visitor.
So I may have missed the trade. I put it on. If we miss the trade, we miss the trade. That's part of it all. So there you go. There's my my trade. It's still open. And if it doesn't hit, it doesn't hit. I don't even want to pay 50 bucks to tell you the truth. I just assume I'm going to, modify it. Right now, that trade costs 58. I'm going to say I don't want it unless it's 40 bucks. 40 bucks. So I just changed it to 40 bucks. Haha, it filled at 40. I filled at 40. So there it is. Filled at 40. All right, so now we just hang around for 14 minutes and see if it drops in there. If it breaks this this low, I think it will definitely go down there. And if it does go down there, I'm going to take some quick profits. So I don't want it to just pass through and then miss out on it. So that means that I need to set up my system to try to get out if I have to. I'm doing that now. Right now, my trade is worth 60 cents. So if we get a little push down, I'm going to take the profit. Right now, it is worth 68 cents now, or $30 profit. It's fooling with the low. It's trying to make a new low. If it does, I think it will surge. And I got to get ready to take the trade. Now it's going the wrong direction. So that's the approximate target. That's the width of the spread right there. The trade's still in profit. Right now it's worth $73. Well, 65. It's worth 65 cents. $26 profit. Oh, we got a little move down. Worth 70 cents now. Oop, going back up. Now it's only worth 18 cents. All right, so beat Dynasty. I don't get it. What is the point of all this work to make $30 if you don't? If you did that successfully 5 times a week, you're only making 150 per week. Then you didn't hear what I said before. I said that these are experimental trades, and we do not want to take big risk here. The whole purpose of this trade is to do many of these trades with our analysis and then see if we can find some commonality over the course of 100 different attempts. That is the whole purpose of this. The purpose isn't here to try to make everybody money. Oh, ultimately, that is the purpose, right? So if we can discover some commonality in all our trades and come up with a valid strategy after curating this strategy through this process, then maybe we have something, and then we'll add it to our bag of strategies that we might use going into the future. That is the whole point. Hopefully you get that. Beat Dynasty. All right, I'm at 85 cents. See, it's looking at that breaking these new lows as like a big hot potato. Just doesn't want to do it. No problem. It's making these new lows, and it keeps on reacting, or like it's touching a pot of hot water, but it still wants to go down. It still wants to go down with 8 minutes left. Yeah, I think that if it reaches that 75 cents again, I'm going to just dial in 75 cents. And let's see. Will it get there? Will it make another new low? That's the question. If it makes another new low, this trade might be worth a double. So I guess what we may learn here is in a bear market, when you're in a trending day and you're trying to make new lows, this might be the expected behavior. And then maybe it's patience, and maybe the proper thing to do is to put a trade on that has a very high probability of making some money. Now, I only spent $40 for this trade. I'm currently at 35 cents. Well, for the value of the trade. So it needs to do another move down if I'm going to have a chance. But now it looks like it's just moving off here. Will it make another new low? Well, I don't know what the advantage of an iron butterfly is. They will produce exactly the same profit. Same risk, same profit, everything will be the same. So I guess, regular symmetrical butterfly will just be simpler. You would just be paying for the extra leg. I don't know what that means. An iron butterfly, no matter how you look at it, would be the exact same cost, the exact same profit potential. It doesn't matter. You're still paying per contract. I don't believe the iron butterfly has a smaller spread. I mean, we can try it, next time, and see if it makes a material difference. I don't think it will. Only have 2 minutes to go. I don't think it's going to do it. Still worth 50 cents. I mean, I could get out with an $11 profit right now. Not now. It's only worth 23 cents. That just dropped dramatically. So now we need that next surge down. Less than a minute to go. Come on. Now it's like get into that profit tent or don't do it at all. That's it. We're done. Never did it. What anxiety was there in betting $40? This was strictly like an experiment looking at a data point. So I paid $40 for this data point. So Gene says that an iron butterfly has a smaller spread. Well, I'll have to look at that and see whether or not that's true. So the reality is that I could have gotten out if I wanted to, but there wasn't really any good reason to. If it had dropped down very, sharply or made another new low, it would have easily have made 10 times my money. So I guess it was worth the risk from that point of view. So we'll leave it there. All right, back to the big head. So we'll note this and the behavior that we experienced on a down day, on a trending day, and how we actually placed the trade and all of that stuff. And we're compiling all this information. We're talking about it in the group and seeing whether or not there is another way that we could have capitalized on this. Now, where it ended up, it started consolidating in this area around 2:30 and at 3 o'clock, and then never really moved off of that. So that might be another area of notation that we'll take note of. An area of notation with a little bit of redundancy from the redundancy department. But that is very interesting, and that seems to be a commonality, at least in the past several weeks. We come down in the last hour or so, we tend to kind of get into an area and then consolidate there. But there have been times where it will then rebound or move down again. And so it's kind of random from that perspective. Now, of course, in the aftermarket, it's going to move down and go right into our strategy. So if you had put this on in, well, maybe no, it wouldn't have mattered. So, well, there you go. Gene is saying a long call. The long put has a smaller spread than the long call. Well, I didn't see that, but maybe you were right. Oh, we got some, gonna ban somebody. Did you make any money? No, lost $40. I didn't look at the spread. I didn't notice any spread difference, to tell you the truth. I mean, maybe we can see that right now if we go to the options chain. So, like here, right at the money, $1.55 to $3. I mean, you can't go by this. It's about the same. I don't know that you can even go by this spread here. You might be right. So maybe next time we'll do that as an experiment. We'll try an iron butterfly as opposed to just a symmetrical butterfly, and then or do it 3 different ways. Look at the call, the put, and the iron butterfly. They'll all be exactly the same value, so we'll see which one's the better. How's that? And that's a good hypothesis, so might as well try it out. I mean, if there's a better way to trade this, and over the long run, over 100 trades, if it makes a material difference, then and it makes you another 5 or 10%, then we should probably pursue that new thing. All right. Well, that's it. That's today's final hour trade. Came very close. It was in profit for a while. I suppose I could have taken profit, but I didn't. So I didn't even want to take the trade, to tell you the truth. But that's it. Peace to you all. Take care. Have a great rest of the day. We'll see you tomorrow.